Well, hello, everybody. I trust you are well. Welcome to Live Trade and Profits, and I hope you are enjoying your Wednesday. So I want to have a look at something. I did a bit of research on Wednesdays, actually, which if we do get time, I'll be able to show you a little bit of it just now. But before we do that, I mean, it's really been interesting what's taking place in the world with the with the breakout of the war in the Middle East. The chart patterns are the chart patterns, but man, there's just been a lot of volatility in the past couple of days. So, whatever you're doing, you just need to make sure you trade in small and you are able to tighten your stops as quickly as you can, just to minimize the losses. And I'll talk to you about that and what I mean. I took a few trades earlier on in the morning, and I got stopped out. But I've been really trying to just manage my risk. So whenever I take a trade, I'm using wide stops. Then I'm pulling the stop down quite aggressively. So if I get stopped out, it's not at the full 1%, 2% risk, whatever it is you use. It does, of course, add up and build up, but the goal is to try and keep that as small as possible. So presently, this is UK, excuse me, this is UK 100. UK 100, 5-minute chart. What we had, I'll talk to you about the trades that I took. So right from the morning, we had this market open as a doji, and I've just put that famous magenta line at the open of this particular session, just so that I can keep track of it, as opposed to the open of the day, now in the European session. Very difficult to try and jump into any trade here. And I could look at it, doji, breakout up above a doji, failed breakout, another doji, then another doji, and you kind of thinking, do I buy above the doji or do I wait? Then the market accelerates up, and as it went above the high of yesterday, I thought, well, let's see if I can take a trade with a pretty wide stop. If the bulls are going to take over the market, it will go very far. But it failed, and I pulled my stop up quite aggressively, which is what I'm talking about just now, about keeping a tight stop. And I got stopped out. I mean, look at that huge candle. Doji from the high of yesterday, huge candle. So had I not tightened my stop or kept a tight stop, I probably would have still been stopped out, because the stop was here. I would have pulled out, but I would have been stopped out at a much greater loss than, keeping a tight stop. So I guess probably the point that I want to emphasize today is whatever trades you take, use a wide stop, wider than usual. You can see this candle was such a rapid acceleration down. I thought, well, I'm going to sell at the market, and I sold, but the stop was here. So the stop was quite far away. And of course, I anticipated or I expected that there will be a little bit of follow through. And because the stop was so high and I was trading small, I had another order here, bad fill, but immediately it failed. And I'm thinking, well, such strong bearish strength. Let's see if there's likely to be follow through. There was a follow through, which was a lower high, but the lower high failed. So, I decided to quickly, I held through actually and double top. And I thought, well, the bears might still accelerate down. But when we got here and the bears failed to break through beneath this doji, because if they're strong, at least it would have been an outside candle and a little bit of follow through. That's when I decided to close my trade. So I just quickly close the trades, just building up the principle. But you got to take your trades, but you got to manage them tightly. Because I was managing exit in the trades, I did not get a chance to jump into the market here. But if you had not taken any of these trades and you were waiting, this would have been a good opportunity for you to take a trade. But again, because of where we're at, the uncertainty in the market, the huge forces driving the market, don't put your stop here. You'd have to use a pretty wide stop. Why do you use a wide stop? You just want to give yourself leeway. If it fails, you can get out with a small loss. But if it does accelerate and the bulls start to take over, you can still add on into your position. So that, if you're not in shorts, would have been a legitimate place to place a stop. Then we got a double top. Okay, so the bull's trying to accelerate up, but we got a double top. Very bad signal for the bears. So if you got a double top, if you want to trade the double top, at least if I'm not going to trade the double top before I get a lower high, I'd love to see at least a bear candle beneath it. I mean, if you decide to take it because you see a failed breakout, again, you need a stop high up above here. So when I say wide stops, you need something like a measured move. So let's say you're taking that. Just look at the trading range that you have. So your stop is going to be, your initial stop is going to be, put something there. That's a 7665 level. Put your stop there. If the market moves your way, you pull your stop down. And if you get stopped out, it's not the full 1% risk, it's a fraction of it. Alternatively, you wait. Then we entered into a tight trading range. Market started to accelerate down, and because I'm placing orders at the market, I placed an order, got a bad fill, and my stop, which was I should have marked it, but it was a wide stop. I pulled it all the way down, and I got stopped out. Or there you can still see the stop level. So I pulled the stop down and got stopped out there. Then we've continued to go sideways. So I still want a short, because of the structures. And if I do get a short setup, I don't know, in the next few minutes that we're here, I will take a short, but I'm still going to start off with a wide stop. I'm still using that kind of measure. I'm starting off with a wide stop, so that if it goes against me, I'll just go like that, pull the stop down. You can immediately see if I pull the stop down to there, I'm already at half the risk, or whatever it may be. I have another trade which is open right now. Probably I'll show you just now, but I've pulled the stop down as well. Not in here. This is in the DAX. Okay, so that's, I'm looking to go short. I want to see if we get the opportunity right now. Then I want to show you another trade before we look at the other markets, which I took, but I just did not manage it well. I'll tell you why I'm saying I didn't manage it well. So when I'm going through the day, when I miss a trade, I mark the trade in blue. I just use a blue rectangle so that when I do my analysis at the end of the day. By the way, that's something that I tell you. And at the end of the day, it's just a lot of work, but I got to do it. I look at all my trades and I say, man, you should have taken the trade there, you should have done that. Why didn't you do that? What's going on inside the future? So the whole issue of psychology. Sorry. We've got strange weather here. We're turning into summer, but winter is still here. And, we're still getting all of these coughs and things that attack us taking place. But in any case, so this was the opening candle. And I've had to do a little bit of administration for myself, just to make sure I don't miss these things again in future. So this was the opening candle. And you will notice that gold is on the 15-minute, euro is on the 15-minute. By the way, I have up to 8 markets that I look at, which will include the pound. In terms of currencies, pound is on there. Excuse me, I've also got the S&P 500 in there. So I've got all these markets that I'm looking at. But what I do is at the beginning of the week, I have a quick look and decide which ones I think are likely to have the movement, the momentum, bearish, bullish, whatever the case may be. And that's what I then narrow down to the 6. So end of the day, when I look at the markets, I have a quick look and say, oops, actually, you've got euro versus dollar, for example, and it's in a trading range. But if you actually pull in another currency pair is trending, that's what I'll just swap the two. I don't want to have like 20 things to look at because I can't process that quickly enough. In any case, so while this was taking place, the open, 15 minutes, I actually had a timer on my alarm at 1:15, and I came back and said, oh, I've got a tail on top. I don't want to trade above a tail on top. I'll come back and have a look. Then I completely got distracted looking at the indexes. And when I flipped back again, the market was up here. And I said, yeah, George, maybe we should take that, put a wide stop. And now I'm distracted, which is a recipe for making mistakes. So I took that there with a wide stop, and I pulled up the stop, and I was just pulling the stop and said, well, I want to make sure this thing doesn't get stopped out at break even, which was wrong thing to do, and got stopped out. What I should have done is taken the trade at the correct time. That would have been correct time, and then manage it up. I rarely take breakout trades. This was, although it's gone up, even if I hadn't been stopped out, it would have been a mistake. I'd rather wait for a pullback and then see if I can jump into the pullback. Anyway, if you're looking at gold, gold is looking pretty strong. It might be a little bit late to jump in unless you trade breakouts, or probably wait for another pullback. Pullbacks will come, maybe a little bit high, but that's looking good. Euro, nothing is set up here for Euro. For any of those looking at the currencies, very interesting, huge rally we had yesterday. I still have Euro on the chart. Now I have my little timer on. I'm coming back to have a look and see if I get a double bottom or double, a wedge bottom, and then possibly acceleration up, which I can take it. And the usual thing, just quickly, if you're taking a trade there, then I need to just put kind of measured move stop. As soon as it accelerates up, tighten it. But I want to take it. I want to take it up there like I did on gold. Two US markets that I will look at when the US markets are open. I got the Dow on, and I've got NASDAQ. So just kind of leave them there. If anything sets up, I'll jump in. But usually these markets are primed for the US open. We've got news coming up in just less than 2 hours from now, so something to bear in mind. Finally, DAX. So thing with DAX now, very interesting. Again, you see with DAX, trading range open that we had, and with trading range, I'm kind of waiting for pullbacks, and I didn't get the pullback. Eventually, the market pulled back way up here, but this was a legitimate pullback, breakout pullback high one. So, went in. What I should have done is actually place an order in the market, but I took it live in the market, which means, if you're taking something live, you may get a good feel or a bad feel, just depending on the volatility at that moment. Got a bad feel. My stop was still way down here, so I pulled my stop all the way up, hoping for acceleration up, but I didn't get acceleration up. Eventually came back and we get stopped out. Then we had this huge bear reversal. Again, sold the market here. Stop was up here. You see, I was talking about the stop. Pulled it down to here, and this market was trying to break below this, took another trade. Then we had the reversal, and this was going well in my favor until we had the failed breakout. And I realized, well, tails at the bottom, bears failing to break out beneath that candle, so probably better to get out. So I got out a little bit of profit. Now we have a wedge top, 1, 2, 3, and the bear is trying to create a lower high. So if you are in the market and looking at this, if this turns out to be a bear candle, which we've got like a few seconds to go, if it's a bear candle and you get acceleration down, that might be worthwhile to take, but your stop is going to be up here. And then if you do get the acceleration, the reason you put the stop up there is you might just get in and the market comes up and goes your way. But if it doesn't do that, if it starts to go your way, then you just drag your stop and kind of keep it there, and then wait and see what happens if it goes your way or you get stopped out. So that's currently what I have active in the market. I'm currently in a trade which I took, bearish trade. Stop was up there, pulled the stop down. So I'm just waiting to see if I get stopped out or there's acceleration. Get acceleration, I'm gonna jump in. If not, then just wait and see what happens. Thank you very much, folks. A little bit, I wanted to show you research I did on Wednesdays. I'll do that next week, and I'll start off with that. Just price action patterns, rather what Wednesdays, the day Wednesdays look like over the past 6 months, just that to give you a sense of how the market might react. But thank you very much, guys. Sincerely appreciate it, and we will catch up again.